Hey everybody, welcome back to the channel. My name is Justin. In this video, I'm going to be going over my favorite stocks for August 2023. So I'm going to be going over 3 stocks in this video. Now, I am a value investor, so I try to go find companies I understand their industry, but their stock is just simply undervalued at this time. I try to target a margin of safety anywhere from 25 to 50%. Now, a stock could be undervalued for a multitude of reasons. In fact, all 3 of these stocks I'm going to be talking about today are undervalued for different reasons. So if you get some value as video, hit that like button. It really helps out the channel a lot. And let's just jump right into this first stock. All right, the first stock on my list is Tyson Foods, ticker symbol TSN. You can see a 1-year stock chart right here. So it was up almost $90 about a year ago, and now it's trading around $55. So it's down about 35% over the past year. Now, there's some news that just came out here in the last week that pushed the stock down even farther, about 10% drop in one day. And that's because they announced they were going to close 4 chicken plants across the country between late 2023 and early 2024, cutting around 3,000 jobs. That was announced on August 7th. That is part of their cost-cutting strategy on trying to remove around $1 billion of costs from their P&L over the next several years. Now, most people probably have heard of Tyson Foods. They're one of the largest food companies and recognized leader in protein. In fact, 20% of the chicken, beef, and pork in the United States comes from Tyson. You might recognize some of these brands from, obviously, Tyson. You have Jimmy Dean, Hillshire Farm, Ballpark, right? Idell's, I guess how you say that, IBP, and then State Fair. All right, so let's go on and talk about the competitive advantage for Tyson Foods. And this snapshot from their last presentation does a great illustration on where they're at compared to a lot of their competitors. So, for example, frozen nuggets, they're 42% of the favorite brand, where their next competitor is around 8%. Frozen strips, 37 to 7. Raw breakfast sausage, 38 to 10. So you can see it across the board. Tyson is one of the favorite brands for these different categories right here. Now, if we go on, look at a 10-year financial history for this company. From a sales per share standpoint, they have grown about 4%. About 8% over the last 3 years. What's interesting is their free cash flow and their earnings have really dropped off over the last 3 years. But even more interesting is their book value per share over the last 10 years has been a 12% CAGR. So it's grown 12% per year over the last 10 years, which is absolutely phenomenal. Their ROIC, pretty consistent around 9%. What's also really good about this company is their debt situation is pretty good. They don't have a lot of debt. Their balance sheet is very, very solid. So debt to equity ratio right now about 46% is excellent for a size company that Tyson Foods is. And they have a good current ratio. And their EBIT margins for the most part have been pretty consistent, around 7% overall. So from a financial history perspective, they've been fairly consistent except for the last couple of years. And a lot of that has to do with demand and compressed margins overall, which I think are pretty short-term in nature. Now, as far as a valuation for this company, this is an operating earnings valuation. So I'm projecting out operating earnings and then discounting it back to today. So long story short, I think their sales is going to grow around 4% per year on the top line. They're only going to grow operating earnings around 1% per year over the next several years. And based on a multiple of 11, I come with a share price around $73 here today, which is almost a 30% margin of safety. So for a company like Tyson that has a strong competitive advantage, I think it is very, very undervalued and a very good buy today. But always do your own valuation. Don't trust somebody on YouTube. Make sure you understand how to value companies overall. I do offer valuation templates on my Patreon, which I'll link a description or put the link in the description below if you are interested. All right. Now, next company I want to talk about is Air Transportation Service Group, ticker symbol ATSG. You can see a stock chart over the last year. It's down roughly 30%. So they're up around $35. And here today it's trading around $22, $23, somewhere around there. Now, if you're wondering what this company does, they lease planes, they lease transportation planes. In fact, what they do is they try to find Boeing planes primarily that are about 20 to 25 years old, and then they refurbish them and then turn them into transportation planes. And you can see here that from a revenue segment, ACMI service is around 61%, CAM leasing is 19%, and then other is 20%. And their biggest customers over here, so the government actually is one of their biggest customers at 30%, Amazon's around 34%, DHL is 12%, and everybody else is around 24%. So over the years, they've actually grown their customer base overall. They used to be very, very heavy on the DHL side, so it's been good that they've been able to broaden their customer structure overall. Now, this is their total fleets. They have around 125 planes in total. They do have passenger fleets as well. So this is freighter fleet of 125 and then passenger fleet of 14. So majority of their business is from transportation overall, and they have several that will be coming online over the next couple of quarters as well. So they're growing their inventory, which is absolutely fantastic, which should lead to more revenue down the road. Now, if we take a look at this, this is where I think their competitive advantage falls into, because they do have competition in the space, but they can bundle their services. So not only will they lease these planes out, but they actually have contracts with a majority of their customers saying, hey, we'll lease these planes out, but we're also taking care of the planes. We will do all the maintenance on the planes, so you don't have to worry about it at all. Government, DHL, Amazon will take care of everything. So you can see that they offer that for all their customers, and most of their competitors do not. So I think that's where they kind of separate themselves from their competition overall. Now, as far as a 10-year financial history for this group, they've grown the top line about 12% per year. Interestingly enough, kind of similar to Tyson Foods, you can see their free cash flow has really dropped off the last couple of years. I think management's made some not so great decisions, which has led to this. But their sales has grown at a 3% over the last 3 years, but their free cash flow has really dropped off. However, if you look from a book value per share standpoint, still been around 11% over the last 3 years as far as a CAGR goes, and 13% over the last 10 years. And as far as an ROIC for the company now, or the company stock, it's really important on buying the stock at the right price. And you buy at the wrong price, you're not going to get as good of a value and appreciation from the stock as when it has a very good valuation. And I think it's a pretty good value right now. Now, as far as debt goes, they're hanging around 114% debt to equity. I like to see it under 100%, but keep in mind they have a ton of inventory with all these planes on here. So I actually thought it'd be worse than this overall. So 114% doesn't concern me greatly because of the type of industry that they're in. But what I am impressed with, they do have a solid current ratio. So their working capital is pretty good overall, and their gross margins have been pretty consistent, around 40% in that ballpark range. And their operating income has been around 12 to 14% overall. Now, as far as a valuation goes for this company, I think they're going to grow the top line around 9% per year over the next several years. I think they're going to grow operating earnings around 6% overall. A multiple of a 13 gives me an intrinsic value of around $37 for this stock, which puts a margin of safety around 41%. So I do think it's a really good value right now based on these assumptions here. Now, the third stock I want to talk about is Ally Financial, ticker symbol ALLY. You can see a 1 year chart here. It's down almost 20%. It was up around $37, $38. Now it's trading around $28. All right, let's go on to the next slide and let's talk about what this company is all about. Well, they are a bank. They're the #1 largest all digital direct U.S. bank. They have 2.9 million Ally Bank deposit customers. They have $139 billion retail deposits. Now, this is up 13% year over year. Now, just a few months ago, there's a lot of concern in the market, especially around regional banks and banks in general. And you saw a lot of these banks that just completely collapsed. And one of the banks that I read, a lot of people had suggested that would go out of business was Ally Financial, which I thought was absolutely hilarious because their deposits keep growing quarter over quarter. They're at 139 billion right now, which is absolutely impressive. In fact, if we go on, take a look at this next chart, this actually shows you their deposit growth going all the way back to 2009. So Ally Financial actually spun off GMC. They were their financial services segment of their business. So if you actually went and bought a GMC vehicle, you financed through GMC, you went through their services division, that spun off in 2015 as Ally Financial. So their portfolio is still high in car loans, but that has been, as far as percentage of their total portfolio, has been going down year over year because they're getting in the credit card business. They're also getting in home loans and other areas. That is driving the total car loan percentage down, which is good. But you can see over the last 15 years, this deposit growth has really gone up. And what's even more impressive is that 96% customer retention rates. In fact, if we go on, we can take a look at this next snapshot here, and you can see this is JD Power ranking all the banks out there that are direct banking. And you can see here that Ally Financial for checking is third on this list. Charles Schwab is first, Discover Bank is second, Ally Bank is third in satisfaction. If you look over at savings providers, Ally Bank is number 3 as well. So they're in the top 3 in both checking and savings, which is very, very impressive indeed. All right. Now we talk intrinsic value for this company. Now I'm looking at different inputs here. I'm looking at return on assets of around 1%, assets to equity ratio of around 15, payout ratio of 24%, current price to book is around 0.76, normalized price to book is 0.89, expansion multiple around a 5. That gives me an 18% on average return of what I expect Ally Financial is going to provide to me over the next 5 years. So I think it is very, very undervalued at this time. So those are my favorite 3 stocks in the market right now for August 2023. So let me summarize one more time. So I talked about Tyson Foods, ticker symbol TSN. I talked about Air Transportation Service Group, ticker symbol ATSG. And I also talked about Ally Financial, ticker symbol ALLY. Again, always do your own research. Don't trust me or anybody else on YouTube. You should know how to value stocks that are in the market. If you don't know how to value stocks, I do offer different templates on my Patreon. I'll put a link down below in the description if you want to go check it out. It also helps support the channel, and you get access to my Discord channel as well with other value investors where they kind of share different ideas and kind of talk about different things that are going on in the market overall. But I'm very curious from you guys, do you own any of these stocks I talked about today? What kind of stocks are you buying in August 2023? I'd love to hear from you. Thank you so much again for watching. Hit that like button if you haven't done already. I'll catch you on the other side. Take care and God bless.